And we are live. Hello everyone, welcome to a new episode of Blockchain Talk. In today, it's going to be a very short episode. We're going to take a look at the current state of the market, and we are going to highlight the importance of self-custody. Why self-custody? Well, in the previous episodes, we have spoken about, the current market conditions, the failure of Celsius network, the failure of Vauld, Voyager, and other lending platforms. And today I just want to zoom in a little bit why self-custody is getting more and more important. First and foremost, I'm going to start sharing my screen here, giving you guys a little update on current market trends. As you guys can see here, market is slightly turning red once again. We had a little peak here, as you guys can see on the 7-day average, the small ones on CoinGecko. Still in green, made a little local top, I'm going to say, and we are back on the decline. Let's zoom in on Bitcoin. The past 24 hours went down 3.1%, as can be seen here. So since yesterday, relatively stable, and a sudden sell-off occurred. We fell back underneath 20k, support zone near 19.750k, last 24 hours. As I always say, always zoom out to get a better grip on what's occurring in the market. As you guys can tell, in the last couple of weeks, we saw a little rise, touched the 22k zone, got rejected, immediate sell-off, went back up, immediate drawback, and now, as you guys can see, 22k seems to be the level of resistance, and we are now falling back towards our support levels. Now, what is our support level? For that, I'm going to say simply zoom out, and can be clearly seen here, 14-day average at around 20k, slightly below it. Why dare I say around 20k? Well, if you zoom out even more on the monthly, each time we went straight under, we recovered back around those levels. Now 20k is an average level, I dare say. I know a variety of technical analysts will start zooming out from the graph and say this is the lower point, so here's the most amount of support. Most amount of support naturally 17 to 18k, though I might say 19k is heavy support level. And well, myself, I like to work with averages. By reason, a lot of people who trade try to guess the lowest level of the dip. They want to buy the dip in the sense of we want to have the lowest point. However, as you guys can tell here on screen, what I'm showing is that we are back into a sideways market with local tops. Little top which occurred here, correction slightly underneath 20k, rise again, almost reached 22k, already had such a scenario before, going back down towards 20k, and we will probably see a little dippy here, sudden rise perhaps, and back up towards 20k levels. So these are the trading ranges you need to take into account. I might even say zoom in more to get a better idea what the current trading range is. And the current trading range is, well, I might say, well, if you look at the 30k level, in between 19k up to 22k. That's your current trading range. Do you want to DCA, dollar cost average in it? Just take into account around 19k, just below 20k is probably a good and safe stepping in zone. Anything above will give you profit. With that, the market analysis. I have to stop sharing my screen here. There we go. Sorry, it was a little bit too fast here. There we go. Like I said, current theme of Blockchain Talk today is going to be rather short, and we're going to highlight a little article here on Crypto Potato. Failure of Terra Association and 3 Arrows Capital highlights the importance of self-custody from Radar. CeFi under spotlight, rising competition among NFT marketplaces, yada yada yada. Why do I want to highlight this article? By reason, this article highlights a few important things that you need to remember during current market conditions. And to understand them, you need to take a bigger look. You need to have a more holistic approach towards the entirety of the cryptocurrency market and need to have an understanding on Bitcoin cycles. You see many of these companies, Terra, Celsius, Three Arrows Capital, they might have been around from somewhere 2018 or longer, but they had to yet prove their merit or have seen tremendous growth during the last bull run. And with that, I'm especially zooming in on Voyager and Vault. One of those two was related towards Coinbase, which in the last 3 years has seen tremendous growth. They launched themselves on Wall Street. They started offering more services, etc., etc. So they had some tremendous rise because they could afford it due to the value of the cryptocurrency that they were holding. And the same is true for Terra, Celsius, and Three Arrows Capital. They capitalized on the success of Bitcoin and the cryptocurrency market during the last 2 to 3 years. I'm going to say 2 years by reason in 2020, pre-halving, there was a tremendous crash whereby Bitcoin fell from around 6K back towards 3K levels due to COVID, due to the pandemic, and that the entire global economy was in lockdown. But from that point on, well, everything went upwards at overall, at average. We climbed up from 3K towards all-time highs of 69K in value. That's tremendous, and a lot of projects have been incepted. Most of these projects being DeFi, decentralized finance in nature, being built on the BNB chain. Also, a lot of ETFs have been launched, trading futures, Bitcoin options. So those are all instruments of leverage that will leverage money into the market, but during a bear cycle also out of the market as people lose trust and will say, look, we are now cashing in, and force a variety of lending platforms to sell off their Bitcoin to dump it on the market. That isn't a healthy thing, and I must admit, well, I'm not going to admit it, but I'm going to state it very plainly. Since the beginning, I have been against trading options and ETFs due to their leveraging capacity. Actually, a lot of, well, I'm going to say influencers were all too happy to highlight the strengths of ETFs and that it became, how to say, a thing, an indicator of mainstream adoption. And while in a certain sense that is correct, myself, I see tremendous problems with it. Tremendous problems in the sense that if you want your crypto, your blockchain-based project to be successful, it needs to be decentralized and distributed. Not only where it concerns the support of the network, but also in regards to tokenomics and the spread of your coins. That makes a successful project. By reason, the more distributed and decentralized it is, the less chances are it will become leveraged. Now, most of my critics will say, yeah, but look at Bitcoin, how it's doing. Well, its network works fine. It will continue on working. However, what we're seeing now with the failure of Terra, Celsius, and 3AC are the failure of ETFs and options. An over-leveraged market. A few big players have been buying in tremendous amount of Bitcoin, meaning that where it concerns the coins, it wasn't really fairly distributed. And now this is in play as there is the market finally coming back towards an equilibrium. A reason you must understand that the cryptocurrency market works in cycles. You have cycles of going sideways, a so-called crap market, meaning that the market has stabilized, meaning that supply and demand are in equilibrium. However, during a bull run, well, a bull run for Bitcoin is has its roots in a halving. And what does a halving? Well, it is actually the slashing of the Bitcoin rewards from mining in half, meaning that the supply, the available supply, is going to be halved, meaning for a fixed amount of demand, the supply is getting lower, meaning the value will go up, there will be much higher demand, and it will bring about a cascading effect. That's what a bull run is, and it technically takes about 1 or 2 years for an entire bull run to occur, and afterwards you have 1 or 2 years of consolidation, meaning that the market finds a new equilibrium, will stay there, and will trade sideways for the time being. And you can actually see it if you start zooming out and see the cycles. You see, let's say here, this is going to be the most clear. Which year? 2016. 2016 was the last year where, no, not the last year. In the 2014, now I need to calculate here, sorry guys. Yeah, bull run 2017, 2018. I'm going to make it simple for myself. This was the previous cycle of Bitcoin. It reached all-time highs. Before that, it had another all-time high, but due to the price action, it isn't really viewable here, but let's just say stable price, see a few hundreds. 2017, the halving occurred. You can see steady increase in price. Slowed up, there we go, reaching all-time highs, consolidation, some volatility, and afterwards we were in more or less a sideways trading market, and you can actually see it here. Sure, there was some major dip here, but eventually it recovered up until the next halving in 2020. The little dump you see here was actually COVID, but presumably went straight ahead here. So you have a sideways trading market, something which we are in now. We are currently within this position. But a few drawbacks, local top, that's the local top, that's probably this one here. If you see something like that, consolidation, and we are having normal price action. Then 2020, in May, the halving occurred. Market, I'm going to say, starts gearing up, demand remains the same, and suddenly you have very nice price action, local all-time highs, back towards all-time highs, and now you have consolidation phase. We are up here. So in itself, that's the nature of the beast, they say. Now, what does this all have to do with Terra Association and 3AC? Well, like I mentioned before, many of these companies were riding the wave, mainly this wave. Many of them have been incepted, and a lot of BNB tokens as well have been incepted during this period, made good money, but weren't really designed for the effects of a long-lasting crap or bear market. Bear market is generally short-lived. It's really correction phase about this one. Afterwards, we tend to be in a crap market, that it goes sideways up until the next halving. And technically speaking, 2021 was the bull run. We are now about here, so you might expect it will be going sideways for the time being. That's plain technical analysis based on the Bitcoin cycles. Now, like I said, failures here. How did it come to be? Well, naturally, the depth of the fall all depends on what occurs with the money which has been invested in the crypto market. And technically, we would have been probably best at these levels, at around 30 to 40K trading range. However, as you guys know, major event occurred, and there was the failure, a literal shakeout of first Terra Luna, a DPEG of their stablecoin. They were a Bitcoin whale. They dumped more than 80,000 Bitcoin on the market. That's a tremendous amount. It implies if you have supply, demand, Value should have been in equilibrium. There's an approximate amount of demand for a fixed available supply. Now, what happens is that supply was suddenly heightened due to the 80,000 Bitcoin which has been dumped for a fixed demand. However, that demand has also been tampered with, not necessarily tampered, but suddenly increased. By reason, if there is a sudden dump, well, there's a variety of mechanics which will occur, meaning that others will lose trust in Bitcoin itself and will start selling, so supply gets even higher while demand is decreasing. Naturally, where it comes down to, that's actually dynamic supply and demand. You hear me hesitating here as I'm trying to search a way towards the main topic of today, meaning self-custody and why it is important. But we'll get to that. So Terra Luna, supply demand, that's the reason of the crash, cascading effect, and it actually drew in Celsius, 3AC, Voyager, Vault, and other lending platforms. Even a variety of DeFi projects which have been incepted this year are having liquidity issues with depegging of their own stablecoin. That's just the nature of the beast. It's a healthy shakeout. However, what has self-custody to do with this? Well, you need to understand that Celsius Network, Three Arrows Capital, Voyager, and Vauld were all lending platforms. That they were all based on staking your coins and your crypto. Now, the problem here is the second you are going to stake or you are going to lend out your crypto, because that's what you're actually doing with Celsius and Three Arrows Capital when you're lending, you're actually staking your coins, you're giving it into custody with the lending platform. What happens in times of failure? They will start and put a halt to all withdrawals on their coins. And this underlines one of the fundamentals of Bitcoin: not your keys, not your coins. The second you have them staked or fixed onto such platforms, they are no longer your coins. You no longer have a real right to all the gains you might possibly make. Hence, self-custody becomes very important. By reason, if these guys go down and they say we'll put a stop on withdrawals of Bitcoin, it means that they are still saying, look, these coins here, they are officially, according to our platform, still yours. But we can take a run with it. We can do whatever we want with it. We only owe you that amount of coins in value. And you will see, and this will probably occur with Three Arrows Capital, as they have declared bankruptcy together with a variety of other lending platforms like Voyager and Vault. They will say, look, we cannot pay you back the Bitcoin or your Ethereum or whatever, but we will offer you fiat money to redeem ourselves. But that's the problem. Bitcoin and cryptocurrency need to be seen as a valuable asset. The second they've run away with it implies that they are actually stealing your gains, your profit, future-wise. It's like saying, look, I've got 1 kilogram of gold here. I'm putting it with you in security with the bank. However, suddenly news reaches your ears and the bank says, look, we became illiquid. You can no longer withdraw your gold by reason, well, we need it. Otherwise, you are losing too much value. That's a dick move, plain and simply put. And what's the worst part is, well, bank goes bankrupt, government gets involved, there's lawsuits, etc., etc. And the bank says, look, okay, we are going to keep the gold, but we are going to reimburse you the value of the gold you had with us in custody. Well, that effectively means they've taken property of your asset. They've stolen from you, and they are giving you something else in exchange, which isn't the real worth it has. And that's a little bit a problem here, because we all know, each and every Bitcoin maximalist knows, Bitcoin, after the halving of 2024, so within about 1.5 years, well, we'll see new all-time highs. And people getting paid up now for current prices in their for the current value of Bitcoin, and getting paid out in cash right now as a reimbursement from the bankruptcy of these platforms, they will be seeing literal millions being drilled underneath their noses. It's gone. So that's actually very criminal behavior. And it is one of the reasons why myself, I'm not really present on such trading platforms. Well, I'm not really present on such lending platforms, by reason I know of such practices. Blockchain, and especially Bitcoin, has been developed to be peer-to-peer electronic cash system. It is used not as an asset of speculation, but as a real-time asset, as real digital money. Seeing this occur is actually theft on the higher level. And henceforth is why I say, keep everything as much as you can in self-custody. Self-custody means having a private, possibly hardware wallet, that you have the keys to your own coins, and that no matter what happens, you always have access to them and you can always use them. Not some exchange, not some lending platform which will suddenly decide we're going to stop withdrawals by reason our stock here on Wall Street is plummeting, by reason, well, the value of Bitcoin and other cryptocurrencies are falling and we need to retain value, and people are selling off and withdrawing the Bitcoin from our platform, so we need to stop them. That's plain and simple speculation and theft. You need to protect your assets, be smart about them. Self-custody, especially during this bear market, is of utmost importance. It is of utmost importance by reason that all the big companies, Terra, Celsius, Three Arrows Capitals, Binance themselves, Coinbase themselves, Kraken, Bitvavo, etc., know this is the best time to start accumulating Bitcoin. Declaring bankruptcy and stopping withdrawals is one of the most surefire ways to retain value on the long term, even if it means that they're probably stealing from their clients. Now, that's one of the reasons why almost everyone says, not your keys, not your coins, keep them off the exchanges when you're not an active trader. If you're an active trader, I might even say, hold a bigger portion in custody on a private hardware wallet with your own. Only use a small amount to trade and make better gains. Now, I know it all sounds very appealing to make quick money fast by going all in and taking high risks. Believe me, don't do it. Be smart. Steady and slow wins from fast and short. That's all I have to say about it. With that, I'm going to end this live stream. I thank you all for watching, and hopefully you guys learned something from this live stream. If you have questions, please put them down below in the comments. Like, subscribe. You guys all know the drill. With that, I'm going to say thank you all for watching, and up until